Hey guys, it's Doc's Market Minute for Thursday, August 6th. This is the daily chart of the S&P futures, and I wanted to use the futures because it includes almost 24 hours of price action and more than 5 days a week. So it's going to give us really a more accurate view of the range that is occurring overnight and during the day as well too. And what we have is clearly a consolidation triangle that's happening here. Is the volatility is continuing to vector in on this, and this is usually where we see a relatively large breakout or breakdown from something like this. Again, the analogy for these is you can think of this as the spring being coiled up tighter and tighter and tighter until it finally just flies out of your fingers, and we have no control over which direction that it goes. And this is why we have to be watching these trend lines here very carefully to see which way it's going to go. Now, my guess is, based on previous experience with these things, is that we're going to get some type of overnight gap, which is going to gap well outside of this triangle by the time it actually does release. And so this is why they call these the professional gap, because it leaves the retail traders who are only trading the typical cash session at the door. Now here's the regular cash index, the SPX, and in my regular premium video yesterday we talked about this as the 78-minute chart is going to show us the quickest read on reversals. Reversals start from the inside out. They start with the smallest time frames and they propagate upward one by one. This is why we go with this fractal series. So what we saw yesterday is that we saw the S&P put in a lower high, and from that lower high go to a lower low. So that lower high actually is also in the daily chart. So this swing is done with, and it looks like it's reversing now. So what's likely to happen at this point is the next high from here is likely to be a lower high, and so we've gone into a series of lower highs and lower lows on the 78-minute chart. Now we have on the daily chart, that's probably not going to happen for a while. We'll have to probably drop for a while until we put in the lower high. And again, the probability is that it will be a lower high and continue with this swing. The other thing that we've been talking about for some time now is the fact that up until this point in I'd say late June, early July or so, we were running kind of this, you can see this best on the weekly chart. We were kind of, you can see the volatility continuing to get smaller and smaller and smaller, and since that point it's actually reversed that. So what we're seeing now is the volatility is continuing to expand. So this is what we call a broadening pattern, or a megaphone if you will. The other thing that we noticed was that lower high set up on the weekly chart. So we not only have a potential weekly downtrend in play here, and we certainly have a downtrend in play in the weekly chart of the Dow, right? But I think the more ominous thing about this, it's not necessarily a bad thing that the price is releasing to the downside. We've had just sideways price action for so long this year as the volatility is getting condensed, and I think we're going to start to see it expand again in this megaphone pattern. But the other thing that I've noticed is that when we do have a significant top in the marketplace, and perhaps I need to go out to the monthly chart to help illustrate this, right? So I'm going to pull out the monthly chart and give us a bit more. What we've seen is that tops are a process, and the price gets very volatile at the top. So we've had these nice moves along here, and then the volatility starts to expand and increase. And when I talk about the volatility here, I'm talking about the realized price volatility of the chart. So we start to see these titanic battles back and forth between the bulls and the bears up at these topping patterns, right? So up at the top in 2000 is when we saw this, and we also saw the exact same thing happening when we got to 2007. Just incredible moves. I mean, we'd been in a very quiet market to that point from 2003 all the way into early 2007, and then it just became unhinged. It got to be very unstable, and so this is where we see the broadening pattern kind of working out from here, is that the volatility starts to increase. And so you can see that with now a very long in the tooth bull market, And everybody's kind of looking at each other like, okay, is this the beginning of it? Is this the start? And so what we're looking for is very specific signs to let us know whether or not this has got a signature that this could be perhaps the beginning of a corrective period. Now, there are those that are saying that this is good enough for a corrective period. And that there is some truth to that the price does not have to go down, doesn't have to drop 10 or 20% or anything like that to execute a correction. It can actually execute a correction by going sideways as well too. And this is what we're seeing. We're seeing this sort of buy the dip atmosphere, which we've been in place since really the beginning of 2013. Buy the dip all the way along. But eventually that's not going to continue. And especially if we start to raise rates, I think the initial reaction is going to be to the downside. We could get that final 10, or finally we could see that 10% correction, which honestly we haven't had in the cash index since 2011. It's been a long time. It's very, very overdue. So nobody wants to be a bag holder up here, and this is where we could get into some very violent price action if it does start to occur. Okay, so with that in mind, now that I've scared you to death, which is not my intent, it's just to give you the kind of the context for how things will move, keep your eye on that wedge pattern on the daily chart. Keep your eye on that wedge pattern on the daily chart. Right now I have no bias as to whether this goes up or down from here. It can go either way, and the jobs report could certainly be a catalyst towards pushing this in one direction or another starting tomorrow. That's it for today's report. Thanks for listening, folks. We'll see you tomorrow.